Just minutes ago, the U.S. Treasury announced that it sold 20% of its stake in Citigroup over the past month at a profit of $6.2 billion. That leaves the Treasury with just over 6 billion shares. We're doing this right now with more on this and really the broader outlook for U.S. banks is Chris Whalen, Managing Director and co-founder of Institutional Risk Analytics, a bank rating agency. Whalen, by the way, was one of the first analysts to warn investors about the risks of subprime loans on U.S. banks. It really was an early warning. Chris, good to have you back with us on Bloomberg. Citigroup, what do you think of this news with the Treasury?
Well, it's all good. Citi has done a lot more work in terms of turning the situation around, writing off bad loans. I was very critical of Citi, as you may recall, but we upgraded them recently. We think they're well ahead of Wells Fargo and JPMorgan in terms of working their way through the crisis. So
that's interesting.
Kudos to Tim Geithner. I hope Timmy's listening.
Well, that's interesting because I think when people, everybody thinks JPMorgan kind of can do nothing wrong. You're saying Citi is ahead of JPMorgan. How so?
Well, because everyone believes that Jamie Dimon walks on water, if not several inches above, they've given him the benefit of the doubt. But in things like home equity loans...
They have a lot of exposure, don't they?
Oh, they have enormous exposure. And so do other banks, to be fair. But I think that, frankly, Bank of America, JP in particular, have some issues to deal with. Jamie doesn't have a particularly pretty retail business. Nobody ever talks about that.
Right.
They always look at the institutional side of JP, the swaps and everything else. And in the legislation, obviously, is not going to be helpful either.
Right.
Jamie's half of the over-the-counter derivatives market, by the way.
When does the market kind of catch up with that? Because the perception, you think they are.
Yeah, I think so. The way I differentiate this group with my clients is we have banks with trading books that are in the securities business here in New York.
Right.
And then we have everyone else. Banks that don't have trading operations, that don't have that kind of exposure and that kind of operational risk are really in a different category, in my view.
You have to make the
distinction. U.S. Bank, BBT, even PNC. I launched coverage on PNC today with a positive outlook. So they've done very well. In our ratings system, which is entirely mechanical, it has nothing to do with me, they've never been lower than a B. So I said, let's throw them a rose.